let us start. In the last class, we have till now completed every important thing related to the national income chapter, that is all the aggregates, the meaning, the definition of aggregates, how to solve numerical questions based on aggregates. Then we had started with methods of national income, wherein we understood that there are 3 different methods through which we can solve national income questions. Then we also solved few numerical questions in the yesterday's class. Now the last part from the chapter which is remaining is few theoretical part. So this is completely a theory part wherein we are going to discuss that what are the treatments or what are the things which are coming under different items which come under national income, which is said to be a national income. What are all the things which is said to be the domestic income? What do we mean by national income at current price, national income at constant price, and what do we mean by nominal GDP and real GDP? Fine. So first of all, you will start with the few items. See, in the question, in the examination, there are questions based on this. They will give you an item and they will tell you that give reasons whether the following statement will be included under national income or domestic income. So you should know what it is. Okay, so first of all, what is national income? It will include all the income earned, that is through factor income, not by transfer income. I have already informed this. Whenever we calculate, whenever we talk about national income, we are never going to involve transfer income or current transfer. We always take capital transfer and factor income. So that is one thing. Then transfer payments, financial transactions, income from sale of purchase and goods, then sale of securities, windfall gains. These are all the things which are not going to be included under national income. So now we'll see the various items which are not included in the national income. So see, they have given you the items. There are 2 columns, items and reason. In items, they are telling you what all are the items which are not going to be included in national income. And in front of that, they have given you a valid reason that why they are not going to be the part of national income. Fine. I will be seeing 5 items from national income, 5 items from domestic income. Rest, it will be all homework. You all have to go through it, learn it, see it. And if at all there is any doubt in any of the item, you can ask me in the session in the next class. But we are going to see 5 items from each one. First item which is not going to be included in national income is transfer income payments like scholarship, old age pension, unemployment allowance, gift expenditures on birthday, marriages, pocket money, remittances from abroad, financial help to victims of natural calamity, meals to beggars, compensation given to accident victims, etc. These all are the things which are not going to be included under national income. Now, what is the reason why these things will not be included under national income? So, because they are not connected with any productive activity and there is no value addition. We see, when we talk about national income, under national income, what do we want or what do we calculate? We take all those activities which are regularly taking part in the economy, which are the regular part of the economy, regular activities of the economy. But all of these things are not the regular part of the economy and they are not producing anything in the economy. They are not productive activities. Now say suppose I am giving 10 rupees to a beggar. If I give this 10 rupees to a beggar, in return that beggar is not going to give me anything. He is not going to provide any kind of productive activity or productive services in the economy. So these 10 rupees is my transfer income, which is not included under national income, because national income includes only those activities which are contributing towards the economy, which are contributing in the production of the economy. So these all things, giving gifts, pocket monies which you receive from your parents, all of these things are not the activities which will impact the economy's production or productivity. And that is the reason these all are things will not be included under national income. So in the examination, they will give you one question like old age pension. Explain whether it will be included under national income or not. So you have to say that it will not be included under national income because it is a part of transfer income, and transfer incomes are not included in national income because they do not provide or do any productive activity in the economy. Next is compulsory transfer payment like interest tax, capital gain tax, and indirect tax. So any kind of taxes like transfer payment taxes or interest tax, capital gain tax, these kind of taxes. Again, these taxes will not be included under national income because they are the transfer payment. Government does not make any promise to provide services in return. See, when you pay taxes, when you also pay tax, we all pay taxes. Everybody and anybody who is working, who is earning income pays taxes, right? So government in return does not promises to anybody that in return I will be giving you something. Okay, it will give something to the entire society, to the entire country. It does not give anything to a single individual. Now, if say suppose I am paying tax, when I pay tax, government in return will not tell me that, okay, Ritika, you have paid taxes, so I will buy a house for you on rent, or I will construct a road for you. No, government will not say that. Whatever government does is going to be for the entire society, for the entire economy. So such taxes are again transfer payments and hence will not be included under national income. Next, sell and purchase of financial assets like shares, bonds, debentures, etc. This I have very well explained that whenever we talk about financial assets, bonds, securities, debentures, are all these part of investments. So I already explained you that investment brought two categories of investment is capital investment and financial investment. Capital investment means investment on raw material, machinery, equipment, tools, building, land, etc. And financial investment means what? Financial investment means doing investment in securities like shares, debentures, preference, equity, etc. So in economics, we only and only talk about capital investment. We do not talk about financial investment. In economics, okay, listen to me very carefully. I am saying in economics subject. In economics, whenever we study economics, we are only going to be concerned with the capital investment and not with the financial investment, right? Financial investment will be concerned in your financial subject like accountancy, finance, and etc. There you are going to study about both capital as well as financial investment. But when we study economics, our prime focus is only on capital investment and not on financial investment. Now, such transactions will not contribute to national income because they do not contribute to the current flow of goods and services. These financial assets are mere paper claims and involves a change of title only. Now, why this transfer of shares or purchase of shares, sale of shares will not be included in national income? Because we assume or we say that it deals with paper, it deals with documentations, it is not producing any kind of goods and services in the economy. I'm so sorry. It is not producing any type of goods and services in the economy. There is no involvement of goods and services in the economy, and that is why we say that financial assets are not included in national income. Then comes windfall gains like winning from lottery, horse race, contests, gambling, doing illegal work. All these things are called as windfall gains. And again, windfall gains are not included in national income because again, they are not the productive activity. Okay, if you are earning money or if you are getting profit from doing some criminal activities, okay, from criminal activities or from doing any wrong illegal activities like lotteries or your horse race or cricket or contests like these, they are not productive activity and hence again they will not be included under national income. Fifth is non-market transaction like domestic services rendered by a housewife, kitchen gardening, parent teaching his child, or leisure time activities like painting the house. Again, all those. Now, when we were studying the precautions of value-added method, we have studied there already that all the domestic services will not be included in national income. All the I'm so sorry. Wait 2 minutes. Huh. So all these domestic services which are taking place in the economy, again those services will not be included in national income. Why? See, domestic services means what? Any services or anything which is done out of care, love, respect, emotions, like this. Okay. So if our mother is working in the kitchen and she is preparing nice good food for us, our if say suppose our father is a doctor, I fell ill, so my father treats me, so of course my father is not going to charge any kind of money from me. So that means it's a free of cost. I have taken the treatment for free of cost. I have taken the services for free of cost. Same way, if I'm the teacher, I am the teacher. So if I am a teacher and I am teaching my sister or a friend, then again I'll teach her for the free of cost. So that is all the domestic services. So all the domestic services are again not included under national income because it is difficult to ascertain their market value, and such services are not rendered for the purpose of earning income. Of course, if my father is treating me for my illness, he is not treating me by keeping in mind that, okay, I want to take profit from my daughter. No. Right? If our mother is cooking food for us in the kitchen, it's not her in mind that she'll take money from us or she wants to earn profit. Right? So all these activities, all these services are not going to be included in the national income. There are few items more. So there are total 10, out of which 5 I discussed. Remaining 5 will be homework for you all. You all have to go through it. If you all want, I'll just upload this on a discussion forum. From there also you can go through it and see. If you have any doubt, you can get it in the next class. Now we are going to see the items which are going to be included in national income. Now we'll see 5 items which will be included in national income. Anywhere, if there is any doubt, stop me and ask me. Okay, don't sit quietly. Because these things we have already studied while we were doing precautions and while we were doing the theoretical part from all the 3 methods. So it is just the repetition of that. But still, if you all feel that there is any doubt or you have not understood anything, let me know. Go cool, especially because you have not attended the session. So if any doubt in any of the reason, let me know. First, brokers commission on the sale and purchase of second-hand goods are financial assets. So we have already seen that any kind of purchase and selling of financial assets or, or second-hand goods will not be included under national income. But any brokerage or commission charged while purchasing and selling of goods and services or financial assets, that brokerage or that commission will be included in national income. Why? Because that service of brokerage or commission has been provided to the person at that point of time. It is a fresh transaction for the economy. It is a new transaction for the economy. So that means it is doing something productive in the economy, and that is the reason it will be included under national income. Then services provided by the owners of production unit like imputed rent of owner occupied house, interest on own capital, production for self-consumption. So again, all the services which are been provided by the owner production house, that means if the owner himself is living in that house, but still we can find out the market value of it, and that market value will be called as imputed value. So imputed value of a rent, imputed value of interest, and if the person is doing the production for self-consumption, all this will be included under national income because they contribute to the current output of goods and services, and imputed values will be included in the national income as they are related to productive activities. All the imputed values are going to be included in the national income. Imputed rent, imputed interest, imputed profit, imputed capital, everything will be included under national income. Third is capital formation, like purchase of machinery by a firm, construction of a new house, water pump purchased by a farmer, construction of a new bridge, expenditure on additional assets, addition to stocks. All of these things are going to be included under national income. Yesterday only we have studied, and day before yesterday also we have studied. All this is going to be the part of GDCF, that is gross domestic capital formation. Any new capital formation taking place in the economy will be included under national income. So be it be a purchase of machinery, machinery, purchase of raw material, purchase of a new house, construction of a house, new construction of a house, reconstruction of a house. All these things will be included under national income under the heading GDCF. Okay. Fourth, payment of bonus, contribution to provident fund, free clothing given to workers, subsidized lunch served to workers, free medical facilities provided to employees, house rent allowance, rent-free home given by the employer. Again, all of these things will be included under national income in the form of COE, that is compensation of employees. Under compensation of employees only, we have studied all of these things: wages and salaries in cash, wages and salaries in kind, and social security scheme. These are the part of those things only. So that is again going to be included under national income. Fifth, payment by bus fare of household, examination fees paid by students, insurance premium paid by employees, durable goods, purchase of a household, payment of telephonic bill. Again, this will be included under your national income as the part of PFCE, that is private final consumption expenditure. So this is what happens. All the households, all the consumers will spend their incomes, will spend does expenses on different things, and that is what is doing over here in the fifth point. So that is a become making the part of PFC, private final consumption expenditure. So of course that will be again included under national income. Fine. So we saw the items which will be included in the national income and 5 items which will not be included under national income. Now comes the domestic income. We all know what is domestic income, right? Domestic income within the geographic territory, the income earned within the geographic territory. Again, here also we will be considering only factor income and no transfer income. We are not going to take transfer income. So now see, here basically they have given you in the question answer format only. This is how they are going to ask you in the exams also. These are mostly expected for 1 mark types question. Okay. Profit earned by branches of foreign bank in India. This is India. There is one foreign bank, and this foreign bank has profit. So will it be included under the domestic income? Carefully think. It is, we are talking about domestic income. Domestic income means each and every income, each and every factor income earned within the domestic territory. So this branch of the foreign bank is within the domestic territory. This is your domestic territory. So it is your within the domestic territory. So their part will be the part of domestic income, but obvious. So yes, the answer would be yes, it will be included in the domestic factor income as profits are earned within the domestic territory of India. So here the answer would be, of course, yes. Second, profit earned by a resident of India from his company in Singapore. Will this be included under national domestic income? No. Although he is an Indian person, but he is receiving profit in Singapore, different domestic territory. So will it be the part of domestic income? And if I ask you, can it be the part of national income then? If same statement I give you all, and if I ask you that can it be the part of national income? Yes or no? Come on, tell me. Yes, correct. He can be the part of national income because national income involves all the income, be it be in the within the domestic territory, be it be the outside of the domestic territory, based from India. Right, so that will be a part of national income, but it will not be the part of domestic income because it is outside the domestic territory of India. Now domestic income versus national income. Part of domestic income of India is not included in the national income. That is a possibility. Right now we saw one example wherein we said that this is the part of domestic income, but this cannot be the part of national income. So it happens. Why it happens? Because national income includes the income of normal residents only, irrespective of their place of earning, whereas domestic income includes the income of both resident and non-resident, but within the domestic territory. Okay, get the difference between domestic and national income very clearly, very thoroughly. Now, few more examples they have given to you. Now, items which will be included in national income but not in domestic income. So, two items we'll see which is going to be included in national income, but it will not be included under domestic income. Salary received by an Indian employee working in Japanese embassy in India. So, there is an Indian employee. Okay. Say suppose this is India, this is Japan. And here the person is working, and this person is actually an Indian person. And he is receiving his salary in Japan. So now we have to identify this will be in both the sense. We will see if whether it is going to be included in national income or whether it is going to be included in domestic income. Both, there is no option. There is no transaction which can be included in both national as well as domestic income. Okay, so let us see, in it will be included in national income as he is a resident of India. So his salary would be included in national income because he is a resident of India. And national income means what? If there is an Indian person, Indian institution, Indian company, be it be outside our country, be it be outside the territory of the country, but still that their income will be the part of our income. That will be the part of national income. But what about domestic income? Will it be included under domestic income? Domestic income means what? Income incurred within the domestic territory. Is he incurring the income within the domestic territory? Why so much time to think? We always consider ourselves as India. We are India. Whether this person is receiving the salary within our domestic country, within India, no. So he will not be coming under domestic income. He is coming under national income, but he will not come under domestic income because he is not in. Understand the meaning of national income and domestic income. Very simple. I'll explain you in a very simple language. Domestic income means what? See, there are two countries. This is India. This is USA. The red boundary of this area is the domestic territory of India. The red boundary of this is the domestic territory of USA. Now say suppose there is one Indian company. Oh my god, pathetic drawing I have, so don't go on my drawing. This is an Indian company which has been settled in USA. Okay. Now, national income means what? The person belongs to India. He might be in USA, Japan, Russia, China, England, wherever he wants to be in. But his income will be the part of national income of our country, that is of India. But if what is domestic income? Domestic income means the income should be earned within the domestic territory. Be it be a Indian, be it be a resident of USA, Japan, Russia, or whatever it is. But if he is incurring the income within this domestic territory, within this territory, then it is the part of domestic income. But national income means more, what? If it is our country, if it is a citizen of our country, if the person belongs to India, but he is earning his salary or earning his salary, then he will be included in national income, but he will not be included in the domestic income because he is not within our domestic territory. He is earning income in US's domestic territory. Okay. Very simple and basic meaning of national and domestic income. Next one, you all have to answer. Question says, profit of a branch of SBI in England. Profit of a branch of SBI. Now this is India. This is England. SBI is an Indian company but situated in England, and this bank has gotten profit. So now tell me, this profit will be included under national income or not? Yes or no? Will it be included under national income? Very good. Will it be included under domestic income? No. It will be included in national income because it is an Indian company situated in some other country. Fine. Their profit is still part of a national income, but it cannot be the part of domestic income because it is not within the domestic territory of our country. It is within the domestic territory of some other country. Now, the two examples which we saw was both the situation, what was happening, it was included in national income but not included in domestic income. Now, we'll see one example wherein we'll see that it is included in domestic income but not in national income. First, rent received by a company in India which is owned by a non-resident. That means, say suppose this is India. There is one company in India and rent is received in India. Okay. Say suppose this company belongs to USA. Now tell me, this rent will be included in national income? Will it be included in our national income? No. And will it be included in domestic income then? Yes, because it is within the domestic territory. And national? No, it cannot be the national income because that income is of somebody else's company. So, same way. Now, what is national income at current price and constant price? Okay. So, national income, it is the money value of final goods and services produced by a normal resident of a country in a year measured at the prices of the current year. With the name itself, try to understand. Here, the prices of all the goods and services has been considered on the basis of current year. For example, measurement of India's national income of 2018-19 at the prices of 2000. There is a printing mistake over here. At the price of 2011-12. That means you 2011-12, 2018-19. Okay. Say suppose there is one good A. In 2011-12, the price of the good A was 50 rupees. The same good A is pricing 60 rupees in 2018-19. So when we measure national income at current price, then we will measure or we will consider the price which is there at present. That means and at the year 2018-19. Consider that at present we are at 2018-19 year. So the prices of goods and services considered on the basis of the present year or the current year. So the current year is 2018-19 and the current price of the good A is 60 rupees. This is what nothing but national income at current price is, and it is also known as nominal income. National income at current price is also known as nominal income. It does not show the true picture of economic growth of a country, as any increase in nominal national income may be due to the rise in price level without any change in physical output. See, if we measure national income on the basis of current price, then what happens is we don't know clearly that we might feel that the profit we have increased the profit because the price of goods good has been increased. So now price of good has been increased as compared to 2011-12. That means this year we have earned more profit. There can be a possibility that we might have earned profit, but we don't know that why there was increase in the price. In 2011-12, the price was 50 rupees, and in 2018-19, the price got 60 rupees. There could be multiple reasons why the price could have rose. Inflation can be the situation, which is not good for the economy. There are possibility that the supply might be less, that is why the price has been increased. There are different factors due to which the price might have increased. So we don't know actually that how much goods has been supplied and why the price has rose. So there is this difficulty when we measure national income at current price. So to eliminate the effect of price changes, national income is also estimated at constant price. So that was national income at current price, wherein when we compute national income, we will consider the value of goods and services which is there at present. For say suppose I want to make a counter national income or calculate national income of the year 2022 to 23. Then I will count that what is the price of good A, good B, service C, service D at present. At present means this is the present year. So I'll be calculating or taking the values of this present year. That is called as national income at current price. Now what is national income at constant price then? It is the money value of final goods by normal resident of a country in a year measured at the base price year. Base year is a normal year which is free from price fluctuation. Presently 2011-12 is taken as the base year. Now national income at current price. What is constant price? Say suppose 2011-12 is considered as base year. And at present we are in 2022 to 23. Just imagine. Okay. So there is a good A, good B, service C, service D. At 2011-12, the price of good A was 20 rupees. Good B, 10 rupees. Good C, 60 rupees. And good D, 100 rupees. Okay. Just an assumption. At 2022 to 2023, the price of good A was 50 rupees, 15 rupees, 30 rupees and 110 rupees. So when we will compute national income, when we will consider the prices, what happens under national income at current price, we will consider these prices. We are going to consider the prices which were there in the year 2011 to 12 and not the year 2022 to 23. That is what happened when we calculate or compute national income using base year or base year. And base year is 2011 to 12 at present. How do you select a base year? So base year is always selected in such a manner that there is no fluctuations in the economy should have not taken place, inflation should have not taken place, deflation or pandemic situation like we had. So 2019-20 can never be a base year because there were a lot of fluctuations in the price of goods and services, and such year we do not want as a base year. So base year is 11 to 12. So if we measure India's national income 2018-19 at the price of 11-12, then it is termed as national income at constant prices, and this is known as real national income. National income at current prices is known as nominal income, and at constant price it is known as real national income. Now, why do we measure national income at the price of the base year? So, base year is the year which is going to be free from all the economical fluctuations, and it will give you a true picture that how much output with the prices, with the profit, with the GDP. You also have to know that what was the output of the goods and services, how many goods and services were produced in the economy. So if you measure national income using constant price, that will help you to measure all of these things. Now, more they have given you the difference between nominal GDP and real GDP. GDP at current price, GDP at constant price. So when GDP of a given year is estimated on the basis of price of the same year, it is called as nominal GDP. Simple. Current year, constant year. Current year, current year is called as nominal. Constant is called as real. Now you just put GDP in front of these terms. You will get real GDP and nominal GDP. Nominal GDP means when you estimate or when you calculate national income on the basis of base year, same price, same year, current year, then it is called as nominal GDP. And real GDP means when GDP of a given year is estimated on the base price or constant price, it is called as nominal GDP, real GDP. So which is better, nominal or real? So as I already said, real GDP is much more better because it will give you a true picture. It will show you a true picture. There will be no misguiding or anything. It will actually tell you that how many products, how many goods, how much output you have done in that particular year. So real GDP is much more better as compared to nominal GDP. Determination of nominal GDP and real GDP. How do you determine or how do you understand the nominal GDP and real GDP? So before going to this part, let us quickly just take 10 minutes break and then we'll be continuing with nominal and real GDP, and then just it's the last part, then the chapter will be completed. Okay. Mridula, you have missed last class. In the last class, we have solved the numerical question from all the three methods, and there were many more things which I had planned, but many of you were not there. And what I am planning now is I'm going to upload questions on discussion forum. You all have to solve it. I'm going to upload it without solution. I'll just be putting the answers and you will have to solve it, how to solve, see how you are able to solve it or not. If not, then we'll have to keep one lecture for all your doubts that how to solve those questions. Okay, national income, as many as questions you solve, that is good for us, or else we'll be not able to understand anything or know that how to solve the questions, because in each sum there is something or the other new. In each sum there will be new alternative name, new other names, so you need to know those names. If you don't, then the entire sum will be wrong. Fine. So even though you know the formulas, it'll go wrong. So you have to go through the recordings of yesterday's class. With that, the questions which I'll be uploading, I have to solve that and see if there is any doubt in any of the question. Let me know in the session, next session. When I upload it, post that. Fine. Quickly take 10 minutes break and be back. We'll complete this part and be done with the chapter. Okay, let's continue. You there, Mridula? Okay. So we saw what is nominal GDP, real GDP, current GDP, and constant GDP. Now, how do you determine it? So the formula for calculating real GDP. So usually 1 mark question is expected from this side, not more than that. How do you define or what is the formula of real GDP? So real GDP is equals to nominal GDP divided by price index. Price index is nothing but the current price or base price, which you have already studied in your statistics part in class 11th economics, into 100. This is the formula for real GDP. Okay, so usually they don't ask, but if at all they ask you, then 1 mark questions that you have to, values will be given to you. They'll tell you to find out real GDP. Example, see how, what example they have given. If real GDP is, value is not given. Okay. If real GDP is rupees 200 and price index with base year is 110, then calculate nominal GDP. Okay. So real GDP is given 200, price index is given 110, and what is the formula? Real GDP is equals to nominal GDP upon price index into 100. Now we have real GDP and we have price index. So real GDP is 200 is equals to nominal GDP. We have to find out price index is 110 into 100. We can easily find out nominal GDP. This calculation can be done easily. Only that much you have to do. So this is the formula. At times they will give you, they will tell you to ask nominal GDP. Three possible questions can be from here, frame from here. They might ask you to find out nominal GDP. They might ask you to find out price index. They might ask you to find out real GDP. All the three possibilities are there for 1 marks, not more than that. Now the next thing which comes is GDP deflator or price index. Price index is also known as GDP deflator. So as we have seen, nominal GDP is affected by both change in price and physical output. Yes, so nominal GDP means when we calculate national income by current price, we get to know the change in price as well as we get to know the physical output. In 2011-12, the output of good A might be 10. In 2018, 22-23, the output of the same good might be 20 or might be 5. So that also we get to know. On the other hand, real GDP is affected by change in physical output only. When we talk about real GDP, that means what? Real GDP is nothing but your constant GDP. So that is going to be affected by the level of output, the change in the level of output. And to eliminate the effect of price change and determine real change in physical output, we can use GDP deflator. GDP deflator will measure the average level of prices. Yeah, okay, Gokul. GDP deflator will measure the average level of prices of all the goods and services that make up GDP. So what is the formula for GDP deflator or GDP price index? So GDP deflator is equals to nominal GDP upon real GDP into 100. This is your GDP deflator formula. Nominal GDP upon real GDP into 100. So in the question, they have given you the numerical question. If nominal GDP is 15,000 rupees crore and real GDP is 12,000 rupees crore, then find out GDP deflator. So nominal GDP is given to us as 15,000. Real GDP is given to us as 12,000 into 100. You can simply find out the GDP deflator. So GDP deflator is 125. That's all. So we can now also convert nominal GDP into real GDP. Same way, same formula will be there. What they are doing, instead of GDP deflator, they will find out real GDP. That can be done with the given formula. Now, if I want to find out real GDP will go here. GDP deflator can come here. So now how we can find out real GDP? Real GDP can be found as nominal GDP upon GDP deflator into 100. That's all. Okay. Small formulas expected for 1 marks. At times not even for 1 marks, it will not be there only in the exams, but still for the safe side, for safety sake, we have to be prepared for it. Okay. That is the reason why I am explaining this. Now, last topic which comes into the picture is GDP and welfare. Welfare, GDP, though we know gross domestic product. Now we very well know what is GDP. Next term which comes into the picture is welfare. What do we mean by welfare? In a very simple sense. Anybody who can tell me what is the meaning of welfare? I don't want the answer which is written in the slide. According to you, what do you all mean by the term welfare? No? Very simple, students. Welfare means doing good for somebody. Welfare means it is not related to profit. It is related to to do something good for someone. That is welfare. So how GDP is related to welfare? So GDP is often considered as index of welfare of the people. That means higher the GDP, higher the welfare of country. That means your GDP of the country can be higher when everything is going good in your economy, when everything is going good with the each and every individual living in your country. So it is considered that if GDP of a country is good, the entire country's condition or entire country's situation is very good. So welfare means sense of material well-being among the people. That means all the people who are living in the country, in the economy, are well-to-do, are doing good, and are fit and fine. So it depends on greater per head availability of goods and services. Whereas GDP means what? The availability of goods and services. And welfare means are those goods and services available to each and every individual who is there in the economy or who is there in the country? Are those goods and services available to them? If yes, then your welfare of the country is good. Your economy is, or country situation is good. Higher GDP is generally taken as greater welfare of the people. So as I said, more the GDP, more is the consideration that where people living in the country are very happy, very good, and very satisfied. So this generalization may not be correct due to following limitations or reasons. So this assumption that higher the GDP, higher will be the welfare, or lower the GDP, lower will be the welfare. They say that this assumption cannot be true or cannot be correct in all the situations. There are limitations to it. If you want to compare, or if you want to understand the welfare of your economy, welfare of your country, then you can't just rely on the GDP of your country. Why? So what are the assumptions? What are the limitations? First, distribution of GDP. So your income of the country is very good. But are you sure that that income is distributed equally amongst all the individuals who are living in the country or living in the economy? Are you sure about that? No. We are not sure about that. Our GDP of the country, our income, national income or domestic income of the country is very high, very good as compared to other countries, as compared to other nations. But those income which we are receiving, the income which our country is receiving, is that income reachable to each and every individual living in the country, living in the economy? So they say it is possible with rise in GDP, inequalities in the distribution of income may also increase. Gap between rich and poor increases. Rich will get more richer, poor will get more poorer. So GDP does not take into account changes in equalities in the distribution of income. So welfare of the people may not rise as much as the rise in GDP. So they are saying that we cannot completely rely on the GDP of our country. We cannot say that if GDP is increasing, that means the welfare of the people is also increasing, because we never know, we don't know whether all the income which the country is receiving is reaching towards all the individuals of the country or not. Second, changes in price. So you never know that the possibility of your increased GDP might be because of your increase in prices of goods and services. Increased prices of goods and services means the situation of inflation, which is not the good situation for any economy. Okay, so you might feel that okay, the GDP of my country has been increased. Now say suppose, take a very simple example. At the base year, the price of good A, supply of good A and price. Supply 2018-19, okay. 2018-19 good A total output was 10. Total units produced of good A was 10. Price was 5. So your total income, national income is, just an hypothetical example. National income was 10 into 5, 50 rupees. Now, in situation, next year's situation. Next year's situation or present situation, 2022 to 23. Same good A. Now the units supplied in the economy is 5. And price got increased, say suppose, by 15. Now see what is the national income of the country. National income of the country would be 75 rupees. So with this, what we will say, oh wow, the GDP of the country has been increased. In 2018-19, the GDP, the income of the country was 50 rupees. But now see, the GDP of the country in the year 2022-23, it has been increased by 75 rupees. By 25 rupees, we have improved. But see the total supply, the total units produced in the economy. In 18-19, we produced 10 units and the price was just rupees 5. But 22 to 23, we produced only 5 units and price rose to 15 rupees. And that is the reason your GDP has been increased. Understood? This is what happens. So now if I calculate or estimate my GDP or national income using current year method, nominal method, then in that case I will consider 75 rupees. Whereas I will not estimate or I will not see that how many quantity of goods were produced and what was the price. Price got rose to how much. So that is why we say that national income calculated or estimated on the basis of current price year misleads the reader, misleads the economist, misleads the country. Because now you can see that 75 rupees ka income, 75 rupees GDP. But behind the scenes, what is behind the scenes happening? Behind the scenes, the total physical output of the commodity is so less, it has reduced, and the price of the same commodity has been increased. So this is why they say that you should always take current year's, constant year's price. you will get a clear-cut idea with that. So they say that changes in price will influence your GDP or will change your GDP. So if increase in GDP is due to rise in price and not due to change increase in physical output, then it will not be a reliable index of economic welfare. And that is what the same thing happening over here. Your GDP was increasing due to the change in price and not due to the change in the physical output. Physical output, physical supply is a very important part of or a very important element of GDP. Just the GDP income, the GDP has increased. That doesn't mean that your economy is increasing, your country is improving. No, the physical output, the total output should also have been increased. So that is what they say, the second point. Third, non-monetary exchange. So many activities in the economy are not evaluated in monetary terms. So there are so many different activities which are not uh, estimated on the basis of economic activity, right? Which are not based on the economic activity. Example, non-market transactions like services of household, kitchen gardening, leisure time activities, all these things are not going to be included in GDP and due to the non-availability of data. Non-availability of data means what? You cannot calculate, you cannot give a price to it. If your mother cooking food for you, you cannot give money value to it, right? That is purely out of emotions. So that those activities will not be included under GDP. So again, you cannot say there are so many different activities which are not included under GDP. So you cannot say rely completely on the welfare. Then comes externalities. So it refers to benefits or harms of an activity caused by a firm or an individual for which they are not paid or penalized activities which result in benefit to others, termed as positive externalities activities, and activities which result in harm to others are termed as negative externalities. See, externalities means what? Any benefits or any harm, any such kind of activity which is taking place in the firm, there are chances that there can be a positive externalities. Positive externalities means all the benefits which the firm gets, and negative externalities means the harm, the negativity, the threatening which the firm gets. So of course these things also affects the GDP of the economy. Now example of negative externality: environmental pollution caused by an industrial plant. Such pollution reduces the welfare through negative effect on health. So negative externalities also affect the welfare of the economy. How firms will react or how firms are considered or said to be a negative externality. Negative externality means they are spoiling the environment, they are hampering the environment, creating more pollution, sound pollution, air pollution, noise pollution. Such kind of pollutions are created by the firms. So that means that is a negative externality. Whereas what is positive externality? A negative externality, pollution, means they are going to impact the health of the people. Health of the people is impacted, then how can you say that you are doing welfare for the people? Health is getting impacted, health is getting poorer of each people, then that is not the welfare, na? That is not the welfare for the country. So that is why it will be called as a negative externality. Whereas positive externality, use of public parks by the people for pleasure for which no payments are paid by the public. It will increase the welfare through positive effect on health. Use of public park, construction of dams, construction of roads. If good roads are constructed, then accidents will be less. Traveling time will be saved. So all these things are the positive externality which takes place in the economy, and this can be stated as the welfare of the people. So such external effects do not form part of market transaction. GDP does not take into account externalities, positive or negative. So whatever this positive and negative externalities are there, it will not be included in GDP, and hence we will not be calculating GDP on the basis of those externalities. Then comes the rate of population growth. So GDP does not consider the changes in the population of a growth. If rate of population growth is higher than the rate of growth of GDP, then it will decrease per capita availability of goods and services, which will adversely affect the economic welfare. Of course, right? if the rate of population is more. Suppose there are 10 people. Hypothetical example, impractical example. Rate of population is 10 and the GDP growth is 2. Then just imagine this will lead to such a big problem in the economy. There are so many individuals, there are so many people who are living in a pathetic state, very bad state. So this is what happens. That is why we say that the rate of population and GDP should go in hand, or else GDP should always be higher than the rate of population. Only then you can say that there is something welfare is happening for the individuals living in the economy. Or else you cannot state or you cannot say that there is any kind of welfare activity taking place in the economy. So it can be concluded that GDP may not be taken as a satisfactory measure of economic welfare due to above mentioned limitation, yet it does not reflect some index of economic welfare. Some economist policy planners have suggested the concept of green GNI, that is green gross national income. So this goes another a whole new concept of GNI, GNP, GNI, uh, gross national product or anything like that. So green, with the name, the suffix green itself, you can understand that it is to do something with environment. It is to do something with good with the environment. So this is what the some economists have suggested, and with that we concluded that there are so many limitations due to which you cannot say that you cannot rely on the welfare of the economy and the GDP. You cannot say that if GDP is increasing, that means welfare of the economy is also increasing, or if GDP is decreasing, welfare is also decreasing, because they cannot be compared very accurately or very properly. So we should not say that GDP and welfare can be connected with each other or can be measured with each other. And last, green GNP. What is green GNP? So, green GNP measures national income or output adjusted for the depletion of natural resources and degradation of the environment. It will help to attain a sustainable use of natural environment and equitable distribution of benefits of development. Large number signifies greater sustainability. So, in green GNP measures, basically we will understand that how national income or output can be adjusted or can be improved without harming the environment, without the degradation of the environment, or without doing the negative harms or negativity to the environment. How can we improve it? This basically will clarify or state or say that how should we produce more products, more outputs without harming the environment, without doing the depletion of the environment. Fine. So with this, we are completing national income chapter. So still we have some time. So I am planning we'll just quickly revise the formulas of all the three methods. Okay. As many times you all can see the formula, I want you all to see it. And so that you start remembering it, it goes into your head. So as many time it is possible, write 2 times in a day, every formula, 2 times a day. First, three methods are there: value added method, income method, expenditure method. Formulas of value added method. Value added method ka aggregate is GVAMP, which can be also called as GDPMP. Formula: value output into intermediate consumption. If value output is not given directly in the question, then sales plus CIS, change in stock. If sales is not given directly in the question, quantity into price. If CIS is not given directly in the question, closing stock minus opening stock. Intermediate consumption means nothing but purchases. If at all domestic purchases is given, then You have to add imports. This will make your intermediate consumption. Same way, if domestic sales is given, then you will add exports. This will give you the value of sales. So these were the formulas for value added method. Hmm? Very carefully. Look at the formula very carefully. Understand it. If any part, any formula I'm missing out, let me know from value added method. Formula is value output minus, sorry. See, nobody is correcting me. Value output into I see. Is it into? It's minus. Value output minus intermediate consumption. Nobody corrected me. That means you all only don't remember. I'll write whatever I want and you will be okay with that. Na? Next. Next is, didn't notice. Where is your notice then? Where is your attention? Next is what? Income method. What was the form aggregate for income method? You all only tell me now. I'll not say. NDPFC. Very good. NDPFC formula starts with first two components Mridula will say and then remaining Gokul will tell me. NDPFC is equals to NDPFC is equals to yes, very good. Nice short form. Compensation of employees plus operating surplus. Operating surplus means rent plus royalty plus interest plus profit plus mixed income. Operating surplus is nothing but rent plus royalty plus interest plus profit. COE. What are the subparts of COE? Salaries and wages in cash, salaries, wages in kind, social security scheme. When it comes to rent, royalty, interest, profit, we are going to take both the values, actual value plus imputed value. Profit, what are the subparts of profit? Corporate tax plus dividend plus retained earnings. Right? What else? Anything else I'm missing out? No? Only this much is there under income method? Fine. Last, expenditure method. What is the aggregate of expenditure method? Very good. Very good. Not only GDP, full GDP, MP. Private final consumption expenditure, government final consumption expenditure, gross domestic capital formation, net exports. Gross fix, now gross domestic capital formation. If directly it is not given in the question, then what is the formula for gross domestic capital formation? Yes. Gross fixed capital formation plus inventory investment. Inventory investment is nothing but your CIS, and the formula for CIS is closing stock plus minus opening stock. Net exports. What is the formula for net exports? Very good. Exports minus imports. Okay. Fine. So these are the formulas. Very, very important. There might be more few which I have given to you all in the notes. Please go through the formulas on a regular basis.